You're joined with Mark Chalmers, President and CEO of Energy Fuels. The company is listed on the New York Stock Exchange under symbol UUUU and on the Toronto Stock Exchange under EFR. The company also has listed warrants on both exchanges. Mark has an extensive history in the uranium business, working with companies such as Paladin, General Atomics, Cameco, and many others. Mark is among the few who have a credible long-term history in the business. Mark, welcome, and let's get to it. First up question, why did you decide to hang your hat at Energy Fuels for this new uranium cycle?
Well, a number of reasons. One, I had worked with a lot of these assets earlier in my career in the 70s and the 80s, and had spent probably the last 15 years mainly based out of Australia. I saw not many of us have forgotten about, the share appreciations that we saw back in 2005, 6, 7, and you saw two emerging stars. You saw Paladin Energy, and you saw Uranium One emerge from the pack. Those two were very big performers, and for different reasons. When Uranium One was privatized, and then Paladin Energy had, its troubles with, financial issues. I thought Energy Fuels was the best vehicle out there positioned for the next upturn in uranium prices.
Excellent. So on that, it looks like you had a good situation and a good setup coming with Energy Fuels with your earlier relation. Back a couple of years ago, you were working towards setting up a new uranium vehicle called Uranium Africa Limited. What happened there?
Yeah, I was involved. We acquired through that group. We acquired a couple of some of Paladin's assets that were up for sale. Actually, before they went into administration. I spent about a year with that. They were talking about having sort of a vehicle focused on uranium, and then they kind of changed direction. So they decided they were going to go into other battery metals, and at this point in time, they still hold those uranium assets, I believe.
Okay. So Energy Fuels was the leader, along with UR Energy, in submitting a U.S. Section 232 petition. Why didn't Westwater, Uranium Energy Corp, Uranium One, and others in the U.S. join you guys in this petition and the cost sharing?
Well, we felt it overly complicated it to have a number of different parties involved. We joined with UR Energy for two reasons. That one, we are producers, and we're pure play producers in the United States. When we started looking around at other people who could join us in the petition, they had possible conflicts where they either had ownership from outside the United States. For example, they were, Canadian producers, or they were, potentially, based out of Australia, or had connections to either the former Soviet Union, like in the case of Uranium One. So we thought that it was best just for the two of us to take on the petition, because it's very difficult sometimes to get everybody to sit down and try to write something that everybody agrees with. So we're very pleased that we joined with UR Energy, and we wanted to keep it simple.
Yeah, that makes a lot of sense. And you guys, Energy Fuels, being the number one there in the United States for production, and even quite, arguably a lot of the assets there are very good that Energy Fuels has, makes a lot of sense. Okay, you had a long tenure working with John Borshoff at Paladin. What are your thoughts on John and his new venture with Deep Yellow?
Oh, look I worked for Paladin for nearly 5 years, and John is one of the true visionaries in this business. And how he positioned Paladin, in that upturn 2005, 2006. I have a lot of respect for John Borshoff. I never count him out, because I know how he thinks. And, I think that, he's taken a position in Namibia, which is probably one of the most favorable jurisdictions for uranium exploration and mining in the world. So I'd say don't count John Borshoff out. I think that he's still got a lot of energy, and he can still do great things in this business.
Excellent, excellent. Yes, it's interesting. And following up to that, what wisdom did you gain at Paladin that you are reinforcing with your leadership at Energy Fuels?
Well, I think that, and I'll give you a good example that, Langer Heinrich, was considered a low-grade deposit. It was a low-grade deposit. John really had this vision to increase the production out of Langer Heinrich, up to, at the stage when I was there, we were doing nearly 6 million pounds a year, which was one of the larger projects. I think it's in the top 10 producers in the world. And, John always had this focus on, increasing production and getting some of the best deposits in the world. So, I think, and I think this is also interesting too, because I think my time in Australia, and I'm an Australian citizen, served me well, because I think that, the Australians and the Canadians, they know how to operate in this small resource sector. A lot of Americans don't understand that business, and the sort of time I spent with John Borshoff and others in Australia really served me well in terms of how I think, how I position, and how I move forward in the smaller end of these listed companies and resources.
Yeah, I agree. I think you have a good global view, if you will. You don't have the tunnel vision that might, be put in if you were just hanging around in the U.S. All your life. So you have a good realm of experience, and it's done a nice job for you.
And I also want to add too that the geographic understanding, because there's a lot of people that work in this business. I call it in their patch. They've worked either in the United States only, or ISR only, or Australia only. I think you have to see these projects all over the globe and better understand their economics, better understand the political challenges, better understand the various regulatory hurdles that you have to get over, the cultural issues. So it's been rewarding for me to have that kind of global perspective.
Yeah, absolutely. Back to Energy Fuels. The company has a strong position in the U.S. Are you planning to expand the company potential and asset base into places like Canada, Australia, and beyond?
Look, when the time's right and it makes sense to the shareholders, there's a lot of things I could do with this vehicle. When I came back from Australia, I didn't come back to Energy Fuels looking at just having status quo. I'm thinking big, and again, these are kind of things that people like Borshoff, you learn to think big, don't think small. And I think that this vehicle, where it's positioned, we're in an excellent position to think big and globally, and things like, if we get relief out of Section 232, or we continue on successfully with our upcoming vanadium production, puts us in a very, very good spot in terms of thinking big.
Mark, following up with that, who was instrumental in getting Energy Fuels to where it is today?
Well, it's kind of interesting how Energy Fuels, there were two Energy Fuels. There was a private Energy Fuels that was owned by mainly the Adams family. They were entrepreneurs back in the 60s and 70s. Actually, John Adams is still around, the son of Bob Adams, who formed the company. So, but I worked with a number of people back in those days, and Steve Anthony, who I took over from the 1st of February, he basically started kind of putting together the public company with another guy named George Glazier, which some people have heard of. So they started putting together the new publicly traded Energy Fuels over a number of years, and gathered up a lot of the assets, while I was in Australia. So I was watching this from afar, and just saw that they were doing some good work. So again, I look at this business of a number of different people that I've worked with over the years, and what they do and how they do things, and how you go forward.
So the company has ownership in Virginia Energy Resources. Will the U.S. Supreme Court side with or against Virginia Energy regarding their case to lift the state ban on uranium mining?
I really don't have an opinion on that. We're one of the major shareholders of Virginia Energy. With the courts in that part of the world, I really don't know. I think that, it does emphasize where you get these conflicts between, federal and state authorities on things like mining, and particularly uranium mining. So we'll see where that goes. But yeah, that is one of the investments that was made before I showed up at Energy Fuels, the new Energy Fuels.
Yeah, right. And we're writing up a article about this issue for some other folks. So we're just actually working on that now, and it's a very complicated issue. So it's a tough one, and it's quite a speculation on what that outcome's going to be. So tell us why Energy Fuels. Oh, sure.
I do want to make a comment about Virginia Energy. Is that Coles Hill project was a very high priority for Union Carbide, who is a large uranium producer in the United States, back in the 80s. So, I think it's quite a good deposit, very large deposit. But it was a high priority back in the 80s for Union Carbide. So, companies like Carbide didn't get excited about things that weren't good. And so whatever that's worth as a plug, I remember Carbide talking very favorably about the opportunities and potential for Coles Hill uranium project.
Right, and we understand Sprott also has a stake in the business there, and there is there's going to be an interesting outcome, and even if the outcome is negative in form of the company, there is some light at the end of the tunnel, and it'll be interesting to see how that proceeds. So it's very interesting, and a very watched case, being a significant strategic asset of the United States. So it is going to be interesting to see how that plays out during this cycle. So tell us why Energy Fuels is the go-to company for uranium investors. What sets you apart from the others in your home jurisdiction?
Well, I think that a number of things. One, we've got several projects that are fully permitted, constructed, and in a couple of cases operating. We're actually producing uranium as we speak from 2 of our 3 production centers. To get a permit, particularly in the United States, is very difficult right now. The cost of constructing a new project, is very expensive and hard to finance. So, we've got some great optionality in terms of how we can respond and how quickly we can respond. And those are things that are real drivers of coming back to the U.S. for this opportunity. We also have some other exposure to, other revenue sources, which I had known about from my previous association with White Mesa and the Colorado Plateau. Vanadium is a very hot metal right now. We're planning to start vanadium production literally in days, and we produced a lot of vanadium in the past from White Mesa Mill. But we also had some other side businesses, which we're not trying to focus on as our core business, like recycling and low-level radioactive materials. Now, I think that a few years ago, that was falling on deaf ears. So I've been out trying to tell the story better and clearer in terms of the optionality that we have. The markets responded quite positively. We probably, outperformed the average of our peers by basically, an order. We're about double what other share appreciation has been in the sector in the last year. And as a result of that, we made the Russell 3000. That increased our liquidity. We've got a very strong balance sheet. We've been paying down debt. I mean, I can go on and on and on. but there is a lot of things happening at Energy Fuels, and there will continue to be a lot of things happening at Energy Fuels in the future.
Well, Mark, that sounds like a pretty good set of reasons why investors, specifically ones that are looking at the U.S. jurisdiction right now, is a good place to be looking at Energy Fuels. So moving on, are there any other businesses in the uranium space that you like specifically?
Well, the list is fairly short. I mean, and I think one of the key things with the uranium space is, some different investments offer different exposures and different time frames. I've always liked Cameco, not for the multiple baggers, that some of the smaller ones can provide, but I think that Tim Gitzel and his team are really focused on doing the right things as the largest publicly traded uranium producer with the reductions in production and how they've been positioning themselves. There's other, some great discoveries, like the Arrow deposit with NextGen. I mean, it's longer, further out, but it's a great discovery. I mentioned, Deep Yellow. I think that UR Energy is focused on, being and remaining and expanding uranium production in time. Certainly Energy Fuels. And there are a few others as well, but those are the kind of the key ones. And some of these new, these new companies that have started up, buying physical product. I think Yellowcake Pty, started buying uranium at the right prices. So it's pretty well positioned with this uptick in uranium prices. So, but the list is not long. There may be, 50 things you could potentially buy into, and that's probably overstating. But you can probably count on one hand, maybe going on to the second hand, who I would invest in.
Right. And along those lines, it brings me into my next question. In your view, what uranium business has the best chance of first bringing on a new globally significant mine operation during this cycle?
Well, again, that's a tough question. You have projects that are on standby. Some of those will come on sooner and quicker. But when you start looking at large global assets, it becomes more challenging. I mean, there's some. We have the Roca Honda project, which is our largest longer-term project. You've got, you kind of caught me off guard here, but I know Denison's been doing some work, but it's very difficult to respond, and that's why I like Energy Fuels with the permitted and constructed projects, because even for us, if the gun goes off, and we're producing uranium as we speak, it's going to take us 6, 12 to 18 months to start ramping up our production. But when you look at new projects that aren't constructed, time goes by pretty quickly. So, but that is the opportunity of being in the space and being invested in something like us and Cameco, and a few others. The people that can respond are going to be the ones that win this race in this next upturn. Right.
Absolutely. And with your guys' liquidity and listing on the New York Stock Exchange, and of course in the big board in Toronto, that's certainly a plus for funds, retail investors, everybody looking to get into Energy Fuels. So at Energy Fuels, you have uranium operations that are mostly on standby. You're preparing to bring on vanadium production as an attractive near-term cash generator. You've got projects that you're working on, you're drilling on going forward. So you kind of got different things. You got development, you got discovery, you have production, all more or less ready to go. So what will be the company's focus when uranium hits $40 a pound?
Well, I think the focus will be that I think the investors will continue to show more interest when it hits $40 a pound. I mean, the real price of a pound of uranium is about $60 plus. We kind of stick with the guidance that Cameco has provided, that we get interested in going back into primary production when the prices are closer to $50 plus. Cameco's publicly stated that. $40 is still actually too low I mean, you can maybe trade dollars, and we have projects that we can mine and trade dollars on, but we really want to make a profit. So, the going forward costs on our projects are between about $25 to say $40 at the project level. So we're not planning to be producing a lot of uranium at 40.
Okay, yeah, no, that sounds interesting, and of course, I think for the industry, people shouldn't get too itchy with their trigger fingers at 40 a pound. Hopefully, there'll be some significant holdout to get better pricing, because I think producers can get that. So Energy Fuels has one of the best opportunities in the U.S. to secure long-term contracts with local utilities. At what prices will you obligate the company supplies?
Well, as I said, we're looking at north of $50 per pound, and because we think that uranium below that isn't being replaced at fair value. So assuming we get some positive relief from Section 232, and we don't know exactly what relief, if any, will come out of that, but we're very positive that our argument is very strong. We're asking for a quota on U.S. production, and that would have to be from U.S. producers, and we need long-term contracts north of the $50, as I mentioned, to respond. But again, a lot of the political risk and the technical risk have been dealt with our projects, because they have produced in the past. We know what the costs are. We know they function. We know they work. We know we have projects that, again, are fully permitted. So we are in a position, or will be in a position, when the price is right, to sign long-term contracts to secure the company for as far out as we can secure it.
Well, that's good to hear. So on a follow-up question to this, along the same lines, looking back at the last cycle, in your opinion, why did the large majority of businesses fail to lock in long-term contracts in excess of 50 a pound that would have provided operational sustainability post Fukushima?
Well, I think that a lot of people thought that the market was going to recover after Fukushima quicker than it did. I think people recognize that, when you're looking at, contracts, $45, $50, $55 per pound, that those were low. And even by today's standard, they were low. So people were thinking it was going to all settle out quicker, faster, and it didn't. If I've learned anything in my career, and I hope I learned some things, you should have, particularly if you've got some fairly high debt exposure, you should have a fairly substantial quantity of your production sold forward on long-term contracts, and and the residual you can speculate with, but you certainly want to have long-term contracts, and I'm one of that believes that you should have north of 50% of your production capability, probably closer to 60, 65%, maybe higher 70, secured in long-term contracts.
Absolutely, because these things are gold, if you will, when the cycle turns and you have an oversupplied market. So these long-term contracts can really carry through businesses until there's a return of an upcycle again. So I like your response. Moving on, what key people in the uranium business do you consider to be instrumental to your success and overall industry success going forward?
Well, I think the key people are our employees, and we've got a lot of good experience here. We've got Dave Friedland, who's our counsel and CFO, been in the business, worked with the Lundins earlier in his career. He's been around for about 25 years, mainly from a legal regulatory perspective. Paul Goranson, he was the president of Chemical Resources and also constructed the Alta Mesa in situ recovery project that we currently own. We've got a number of other people in the organization that have a lot of excellent skill sets. We've got some younger people But the key driver of our organization are our people. I mean, I do look at people like, the Borshoffs. I do look at people like Tim Gitzel, Jerry Grandy, some of the people, Orrin Benton, that I worked with back in the 90s, and the Adams, Bob Adams. All these people have contributed to my knowledge base of the industry and how to position ourselves and how to be sustainable. And so I feel blessed that I've had those experiences and worked for some of those great people and great visionaries.
So you have a consultant that works with Energy Fuels, Dustin Garrow of Nuclear Fuel Associates. What's he do for you?
Yeah, and I meant to add Dustin. Look, at Dustin has been in the space for he's probably good 40 years. I think he worked with the Nuclear Navy early in his career. Dustin is more of a marketing advisor, he had a good reputation of selling uranium. Going back, as I said, 40 years ago, I worked with him on a couple of different companies over the 30, 40 years. So Dustin is just been in tune with this market globally for a lot of years. So Dustin does work for us, and gives us advice on the market and some market intel and whatnot. So, but yeah, no, and it still goes back to what I said earlier, that having a strong market position with contracts has been the true leveler in this space in the ups and the downs, and provides a company the ability to have the staying power and make the right kind of decisions, and you got a revenue stream.
Right. So answer this for me. Why doesn't the BHPs, the Rios, and the Techs of the world take a bigger interest in the state of the uranium industry today and at this point in the upcycle?
That's a great question, Andrew. And the industry, if you go back 30, 40 years ago, the uranium industry was dominated by big players, by some of the bigger mining companies, by the oil companies, Gulf and Chevron and Union Carbide and a number of these the BHPs, the Rio Tintos. But there's been more down moments in this business. There have been up moments, and companies like the BHPs have just sort of, and Rios have just focused on their big breadwinners, which are mainly iron ore, was coal. That's diminished a bit. So it is an interesting question why the bigger players are not still in this space, but they have gone, and that's changed the dynamics, and that's changed the importance of longer term contracts too, because these smaller players do not have the balance sheets that they had to be sustainable. And so, again, that's an interesting topic on its own.
Well, it'll be interesting to see what folks in the industry can approach these bigger players and maybe ask, look for JVs, look for different types of agreements that might help push through the cycle here. So that'll be interesting to see what takes place with the larger ones out there. So we're getting about wrapped up here, Mark, and I appreciate your time. Energy Fuels has the only licensed conventional mill in the U.S., White Mesa. Does Energy Fuels have any toll agreements in place with others to process materials there? And is the aim to fill capacity to maximize revenues regardless of where the material comes from?
Look, the goal is to maximize the profit to Energy Fuels. Currently, we have no agreements with any other party for toll milling at White Mesa Mill. Now, in the past, there has been some limited agreements, but we're taking a slightly different approach, or we're trying to take a slightly different approach today. And part of the reason is that with, if we get relief under Section 232, we want to go for the largest margin for our shareholders, and it doesn't necessarily mean that having an agreement with somebody else potentially, is the best path to follow in that regard. We also have the ability, which we didn't have in the past, but possibly pick up some of the land cleanups on the Navajo Nation from abandoned uranium mines that were mined in mainly the 50s, 60s, and 70s, which could fill up the mill on its own. So we're really being very careful on how we allocate and the mill and use it strategically to our best advantage.
Right. Well, Mark, thanks. Are there any final thoughts that you'd like to mention before we go?
Well, yeah. Look, I just want my final thoughts is we're thinking big. We've had probably with our peer group, probably the largest share appreciation year to date compared to our peers, quite substantially higher. We plan to continue to outperform the space because we have the ability to be responding in these different fronts that I mentioned. We plan to continue to have a strong balance sheet, and if we get relief under the Section 232 petition, the U.S. uranium will be the most valuable uranium in the world until the world market catches up with hopefully the relief under Section 232. So those are all compelling pieces to the argument to own Energy Fuels.
Well, Mark, we appreciate you taking the time to chat with us. It's been a pleasure, and we hope you can come back and talk with us as things progress in 2019. We appreciate it, Mark. Take care and talk soon.
Thank you, Andrew.